It's a bear market warning as stocks continue to slide in overnight trading. I'm your host, Steven Van Metre, and thanks for joining me today as money managers are beginning to warn investors that the markets are looking awfully similar to the dot-com bubble. And you should watch out because a bear market may be here. Let's take a look at this headline from Bloomberg that says the NASDAQ days like this were once common during the dot-com crash. The index hasn't wiped out losses of almost 5% since early 2001, and late-day rally lays lurch in a volatile market this year. The article goes on to say that days like Monday are not unprecedented, but when they've come, it's been at times that are not remembered fondly by equity bulls. Today's move was the biggest of its kind since January 2001, in the middle of the come down from the dot-com bubble. And most of other similar moves occurred in the 3 years that the crash took to play out, with few others coming in at the heart of the 2008 crisis. And here you can see in this chart provided by Bloomberg, it shows instances where the NASDAQ 100 erased an intraday decline of bigger than 4%. And you'll notice 2000, 2001, 2002, and 2008. And the common theme there as well, we were in the middle of a bear market. And if you're concerned about your portfolio being able to handle a bear market, well, you shouldn't. Check out Portfolio Shield. You'd be glad you did. Now let's continue the story over to the Wall Street Journal, who says stocks rocket back to finish higher after the deep slump. The Dow has never before closed positive after being down at least 1,000 points. Behind the volatility was investor anxiety over the Federal Reserve and how quickly it will move to combat inflation and how that action will ripple through asset prices. Investors are bracing for a Fed meeting this week starting tomorrow, in which the U.S. Central Bank is expected to shed more light on its plans for boosting short-term rates and reducing the size of its balance sheet. Investors and analysts said the turnaround was driven by a handful of factors. First and foremost, the carnage this year opening the way for some rare opportunities to purchase favored shares at lower prices, and that is the story of what bear markets look like. Stocks go down and people buy the dips because they don't believe it's actually a bear market, and they can be right for a short period, as we'll soon see. But when prices reverse, they'll be back on the sell button. Let's continue on because the action in 2022 has been distinguished by repeated sessions in which significant market rallies evaporated and led to large sell-offs as trading closed. Traders and portfolio managers said they remain wary that the pattern could yet reassert itself in the days ahead. Quote, "We've seen plenty of buy the dip type activity," Mr. Van Metre said, but for the most part, the buy the dip crowd is starting to get overrun by the sell the rally crowd, which is common in bear markets. The closer you get to the cliff, the more nervous the market is, as Mr. Galley said. We don't have the information to trade, and he's right. We don't, because everybody's watching to see what happens. And if you go back to the dot-com bubble and look at this, what you'll see is there were big sell-offs followed by small rallies. And these were on the weekly chart, and you see sell-offs and rallies, and where investors say, look, we bought the dip and it worked. And then it got sold down and back. And now they're looking at, hey, we're back in the bull market, only to go down, 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 and down. And for those worried about the bond market and its lack of response so far, keep in mind that yields can also rally during these bear market events before they too head lower, lower, and lower, as we can see indicating here by the purple line, as investors short bonds in hopes that it is not a bear market, but in turn it is, and yields go lower as they price in weaker and lower growth and inflation expectations. And with that, I'm Steve Van Metre. Thanks for watching. We'll see you soon. Bye now. The content of this video is provided as educational information only, is not intended to provide investor or advice. It's not to be construed as recommendation or solicitation to buy or sell a security, financial instrument, or participate in any particular trade strategy. It's very well prepared by Steve Van Metre. Personal capacity opinions expressed in this video that do not affect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial.